back to Tape Reading Concepts. Today I'll take you over some price action in COMEX Gold, which culminated in a profitable long position midweek. Following a steep decline in price over the course of the Friday session, the Sunday night open brought buyers to the table, and it seemed that 1800 is where price will stabilize and hold. We did get a push to new highs overnight, but over the course of the European session, price had a sharp turnaround, made new lows, and after leaving a lower high, found its way to the downside at around 1795. This is the beginning of the US pre-market around 7 a.m. Eastern time, and it seems that sentiment was carrying over into the US portion of the Monday session. You can see that the attempted rally got rejected sharply, and price was already trading on a slightly lower low. If you're looking to take a position with limited context early in the week, then picking up a short opportunity on the right side of this high, somewhere around the opening bell here, 9:30 Eastern time, picking up a shoulder with a stop above the high, looking for the market to extend its progression to the downside within this stair-stepping action. This is range extension. You can see that price is leaving boxes at lower and lower levels as it's directionally looking for the low. We did end up the session here with a double bottom around 1789, and over the course of the Tuesday session we got a retest in the Far Eastern session, and then one more towards the end of the Far Eastern session, the beginning of the European session. So yet another box leading the progression here. Over the course of the prime time, the European session, we headed higher, likely to attempt one more time on the 1800 mark. The US session here around 7 o'clock, once again in agreement with the colleagues from Europe, looking for a steep climb higher, and indeed there was prices that printed above 1800. What's important here is to note the follow-through quality of the movement, though. You can see that after a pendulum pullback, the attempted follow-through here really culminates in a cluster of price at a lower high with no closes above the 1800 mark. If you are skeptical over the quality of this move to the upside, if you believe that the market is overreaching here above the psychologically relevant round number, then indeed you could be looking to pick up some risk here on the shoulder with a stop above the high, looking for the mean reverting or corrective move to the downside. Of course, this move could end up stopping somewhere in the middle of this session's range, or it could go through the middle all the way to the bottom here in the 1790 realm. In this case, this would have been a beautiful position here in the prime time of the US pre-market on the way down, and there was even a secondary opportunity to enter this position on a 50% pullback following this move lower. So two chances for you to pick up a short idea here, and of course one opportunity at least here around the opening bell on Monday. And of course, if you're looking for exploiting the pattern later in the progression, you could do the same here around the lunch hour on Monday as well. All of these opportunities would have offered reasonable profit for the initial risk in pursuing these directional ideas. Over the course of the Tuesday session, we did find lower lows, so very stable and very much the same behavior between Monday and Tuesday. It seemed that the quality of the price action on Tuesday is much tighter, much steeper, much more crisp as compared to the stair-stepping, consistent yet not very steep behavior on Monday. Overall, on the larger scale though, lower highs and lower lows, price is working now a second failure, this time roughly at 1800, the first one being to hold above 1800 in the beginning of the week. Now, having in mind the overall momentum and the consistency of this progression, we would have expected price to find significantly lower lows, but in the late morning session, it seemed that we found the lows which held by the end of the Tuesday session. Furthermore, there was a pattern of accumulation here. We were getting marginally higher lows and very sharp reactions every time price was dipping here, suggesting significant amount of profit taking and maybe even a long position being built in this realm. Over the course of the Wednesday session, once again, price headed to the downside, and you can see here the potential parabolic quality or the acceleration that the highs were suggesting during the prime time here of the European session. If we compare to the previous low right here, you will see that the wind really shifted somewhere here in the prime time of the European session, and with the US pre-market around 7 o'clock, we actually found new highs. If compared again the two bottoming formations, the marginally higher low definitely suggests some buyer's initiative or some type of impatience or migration of the bid at a marginally higher low, which is different than the solid horizontal door that we saw for the bottom out formation following the first major wave down. This is the first major wave down, the first counter-directional wave, the second wave to the downside within the week, and now it appears that we're working some type of counter-directional or mean reverting idea back towards 1800 potentially. I'm definitely interested in a long idea, but my potential area of interest is relatively low to the bottom, where I can get the best possible reward versus risk. The difference between the lows here from Tuesday afternoon and the European lows around 4 a.m. is just about 10 ticks or $100 per contract. Now this first marginally well-developed circular wave, you can see the round over, the semicircular quality. Within the Wednesday session, it already seems that this second wave is much more developed. So ideally, we're going to see a significant swing to the downside, which is going to give us a marked discount for us to pick up the long at a relatively low price. My projected area of interest was here in the 87, 88, which would have been, again, just about 100 to maybe $200 per contract of a higher low. At the same time, if I analyze the early morning action, you can see that within the steep move to the upside, the bid is migrating about $100 higher every time that the buyers manage to create one of these pivots. So I have seen these two different behaviors. On the macro scale, the potential for a sequence of semicircular waves, and on the smaller scale, steep climb where the bid is migrating higher, $100 every time. Within the prime time here of the US session after 9:30, we finally got a significant pendulum pullback. Unfortunately, price stabilized a little bit too high for my taste. However, with a sharp turnaround here, the market suggested that the low is already in. Of course, if we look at this, it seems that the semicircular wave hasn't quite completed its sequence, and at the same time, the sharp bump with the bid starting again to migrate about $100 higher with every successive push suggested that we might already have left the low behind. That's why I decided to split my intended contract load into two and placing half of the position with the more aggressive idea, which is the bid migrating $100 higher every time. That's why I entered here at a relatively high price, far away from the bottom, but I reserved the second half of the position so that I can average in at a much better price if I'm offered another marginally higher low in the 87 to 88 realm down here. That would allow me for an overall average price somewhere just below 1790, which would be acceptable amount of risk for a move that I was projecting to go well above 1800. Where exactly is price supposed to run out of directional energy on the way up? Well, there are different hypotheses, but I assume that since we got only a $400 progress between this low and this low, if we swing on the way up one more time, it's likely that the next attempt on 1800 will be successful, and it's probably going to give me at least these $400 of progress above the Tuesday highs, which would put me right here in the realm of the overnight, of the weekly highs that were left on Sunday night, right here in 1804 to 05 realm. So I'm looking at the first half of the position here being placed just around 92, projecting about 12, 13, maybe $1,400 per contract on the way up on the first half of the position. And of course, if I'm offered a chance to average in and reduce the cost basis for the overall position, then that would make the reward versus risk parameters even better. As was the case here, we got hit with the profit stick. Price decided on a very steep climb here in the prime time of the US session on Wednesday, and I never had a chance to position the full contract load or the second half of the position. We promptly cascaded up to 1800, and with that much momentum behind my back, I assume that the Tuesday highs will definitely get attempted on. Indeed, the initial rejection here, or the fading of the high around 1800, promptly got taken over by the momentum. You can see that there's virtually no resistance here at the 1802 mark. Price did escalate in a very steep fashion, well above the Sunday high, and towards the end of the session I decided to close. Again, you can see these roughly $400 here above the Tuesday highs, which would suggest that the overall geometry is one of potentially expanding pivots, right? This is the slope at the lows, and this is the slope that we're observing at the highs. My exit here, well, virtually at the highs of the Wednesday session. I did prefer to keep the position on the intraday basis so that I can save the implications of carrying the full margin or the intraday margin to carry over the position beyond the close of the Wednesday session. Yeah, it was likely that price will find new highs as well, but since there was a lot of empty space with very little structure here being built on the way up, we could also experience a significant drawdown within the open position before we actually see the higher prices. So I decided to take the profit and close the position by the end of the session. We did see new highs here overnight and in the early morning on Thursday. I believe the price did top out here, yes, just above 1810. But I was content with taking these quick 3 handles or 3.5 handles, whatever it was on the first half of the position. Unfortunately, not the full contract load, but still a very good intraday move here, which I could easily project again based on the anomaly of the pattern that appeared here in the morning session on Wednesday. It was an anomaly to the overall bearish projection to the downside. I was again comparing the quality of the bottoms, marginally higher low. The entry was based on the steep quality of this movement, and of course the second half of the position was reserved for a potential secondary circular wave. Overall, happy with this winner just before the Christmas holiday. Let me know if you have any questions or comments in the section below. This is Tape Reading Concepts, and I'll catch you in the next video.